What up, what up, what up, what up, what up, what up? Welcome back to another trade recap, another trade breakdown. Multiple trades, well, not multiple trades, but there is a specific trade I want to break down that I took during our live stream today. Now, if you haven't watched the live stream, make sure you watch the live stream. It should be uploaded very soon, but today is August 27th. Thursday, August 27th, watch the live stream. I called this trade from start to finish and exactly my thoughts behind it. But let's break it down, right? So we took this long today on NQ. It was a very nice long. Original target was at the naked value area high. However, we did get trailed out for around 3R. And the reason for my stops being there, I will explain. Right, I'm going to explain. But essentially, this is what we have. We have 9:30 open here. So my profile is based on the regular trading hours. So it only shows regular trading hours. I had a couple of levels marked up. I had the value area low, value area high, volume point of control. These are naked value areas. So when you go into the volume profile, in fact, let me go into the volume profile for you guys. Let's wait for this to load up. Well, whilst that's waiting, whilst that's loading up, let's go back to here. So as I was saying, we have these naked value area levels, which are going to be my key levels going into the session because we opened within the value area. So the question becomes whether we are able to find acceptance above the value area high or acceptance below the value area low and look for an imbalanced state of delivery. However, that is two scenarios. The third scenario is if we just balance within the value area. But what I'm trying to say is, in a nutshell, the value area is going to be an extremely important level because if we are playing within this naked value area, you're going to expect for rotational plays at the highs and at the lows. But if we break out of the value area high or low, then you're looking for that large expansion plays. You're looking for those imbalanced states of delivery. All right, so hopefully this has loaded up. All right, so this is the naked value area. Yeah, naked value area high, naked value area low. The reason why it is naked is in its name. It hasn't been touched yet. It hasn't been retested. The market hasn't tested for auction at the value area high or value area low yet. So this is naked. When we come back, you're going to get a reaction, whether that's in the form of acceptance or in the form of a rejection higher or lower. Most cases, you're going to get some form of acceptance. And the reason for that is because this is initially a balanced range where both buyers and sellers found satisfaction. So when you come back into it, you're expecting for the same satisfaction to appear again. More times than not, that is going to happen. So hence why that becomes my key levels. And that is why, look at this perfect price action. We found acceptance value area within today's is building within this initial range over here. So that is, it's not a coincidence. Everything in the market is never random. It's all calculated. It's all priced in. The market has an extremely good memory. So it remembers everything. But here, so this is what we had. We broke below the value area low. Of course, I don't trade the first 10 to 15 minutes of the session. I like to wait after 10 minutes of the New York bell for price to really settle. But during the first 10 minutes, we break below. And this is the key. We failed to find acceptance at lower prices. Now, my range chart on EXO is a bit bugged where it doesn't show all of the big trades. But if you look at the 30 seconds, so, like I always say, look at where the axis is showing up on both of these charts and is aligning, right? Here, we actually have more bubbles within this consolidated range on my right. So if I mark out the range, right, this is the range that we have. It's a consolidated range where aggressive sellers didn't get rewarded. They are getting absorbed because we have large aggressive selling in the red bubbles, but they don't get rewarded with lower price action. So passive buyers are absorbing all of these aggressive sellers and we start to consolidate, which this isn't an acceptance. This isn't an acceptance range because when you have acceptance, you get consolidation. When you have a battle of orders, you get consolidation. To me, this is a battle of order. So whoever is able to break higher or break lower, they have won that battle. The reason why is because aggressive sellers, they get absorbed here. So if we break below here, they actually win control and they are able to exhaust this large passive buying supply that is currently absorbing these aggressive sellers. So this is a battle of order, and whoever, like I said, breaks above or breaks lower is able to win that battle. And lower, and look at what we have here. We break above, they get, so buyers come into control here. Buyers are now in control. CVD is increasing because we've broken above this battle of orders miniature range. And also, when you look at the range high on this, we also have aggressive sellers that initiated price lower. So these sellers got rewarded, which means this becomes somewhat of a protective level in the form that when we come back into it, you would expect for aggressive sellers, the same participants to step back in and reject price lower again. However, that isn't the case, and buyers are able to heavily overwhelm any aggressive sellers here previously. So these guys are either absorbed or they are trapped, right? And that fuels the move higher. When that fuels the move higher, you're looking for a break and retest. So already, from this price action alone, this is our first confluence. We failed to find acceptance below the value area low, and aggressive buyers are able to step back in and bring price back inside our value area. Because anytime we are in a value area, in a balanced range, when you break above the high or break below the low, you're going to be met with resistance or responsive buying or selling. In this case, we are met with responsive buying because the value area is the most optimal range for the market to facilitate transactions in, right? It's the most important range. So buyers, they take back control. Now, the retest is very important. The reason why the retest is important is because you want to see the opposing side that previously broke out of the range to step back in and attempt to break back outside again. And that is what you're going to get, right? There's always going to be a battle of order. When buyers take back control, you're back inside the range. Sellers, because they were previously aggressive and broke out of the range previously, they're going to try to keep price outside of the range. And that is what the retest is for. So retest, break above our key level, value area low, VWAP, retest back into our value area low and back into our VWAP. Now you're looking to see if sellers are able to get rewarded with lower price action. And look at what you have here. Large aggressive selling, they don't get rewarded. They actually get absorbed. And then the next candle closes higher. So now that's your initiation. This is your absorption. Now you're looking to enter. Oh, what happened there? There we go. Now you're looking to enter here. Stop loss around value area low or VWAP. It's entirely dependent on you. But the setup is still valid as long as we don't break below this level. However, because it is overlapping with the VWAP and value area low, then this is the level that makes more logical sense. Because if we break below that level, there's a good chance this level is going to get taken anyway. So depending on how aggressive you are, your stop loss will be somewhere around there. And then you're looking to target, I look to target the value area high. The naked value area high, right? Because we failed to find acceptance, good chance we come to the naked value area high. However, as we approach volume point of control, that is where I went aggressive with my trail, right? I went break even and slowly trailed up per candle. And as you can see, when we come into this internal high over here, we had a large number of aggressive buying right here. Large number of aggressive buying. This is where I went really aggressive with my trail, right? And I pretty much trailed to somewhere around here. Yeah, right there. So when a candle closes like this and it retraced back inside the volume point of control and this candle was forming, I trailed to basically the midpoint of this candle because we had so much aggressive buying attempt at breaking above this internal high anymore that if we actually failed to pump higher from here, then there's a good chance we're just going to, the market is just going to dump, which is exactly what I mentioned within our live stream. So, make sure you watch that public live stream. It's on my YouTube channel. That is exactly what we had here. So I got a trade out for 3R. It was still a solid trade, right? Solid trade nonetheless. Original target would have been, around 4 to 5R, depending on where you get in and, your stop loss. I believe my stop loss was somewhere around here and I got in at around 2-4, right? So, I would have gotten 5R if it went all the way to that high, but it is what it is. You're not always going to get the cleanest price action, especially when it comes into the volume point of control and the market struggles to break above this internal high. So got trailed out there and that was the trade. If you have any questions, right? So hopefully you guys found that video helpful. If you have any questions, leave them below in the comments. All of my socials, all of my links, if you want to work with me one-on-one, is in the description. So make sure you check that out. If not, take care and I will see you in the next one. That is the trade recap for today. Hope you enjoyed that.